Now, business sentiment has continued to climb across the Eurozone, and despite the optimism, the unemployment is stuck at record levels, and there's some disappointing retail figures out of Germany's bloc as well. We're going to talk much more of that, but I asked my guest, Jacob Kierkgaard, a senior fellow at the Peterson Institute, what to do about all this data and what's happening to the health of Europe.
Well, what's going on is that we basically have had the longest recession in euro area history, and it is now finally bottoming out. That doesn't mean that growth is a strong, sustained growth and job creation is around the corner, but the slump, if you like, has stopped, and that, if you're a businessman, is good news.
How do you differentiate the different countries and regions out of Europe?
Well, basically, there's two regions. There's North and South. The North is actually doing very well. The South, of course, less so. The issue is, where do you put France? Do you put it in the North, or do you put it in the South? And right now, unfortunately, in my opinion, France is sliding south, if you like. But it doesn't change the fact that even if you look at the southern peripheral countries, Spain, Portugal, Greece, Italy, the slump, as I said, has stopped there.
One of the defining issues has been unemployment. And every expert we have on board has a half solution to it. No one seems to have a reason why the unemployment situation is so awkward, and no one seems to have a solution.
Well, I mean, there are basically two reasons. One is that a country like Greece have had an almost 30% cumulative decline in GDP. That's a third of the economy out of the window. You'd expect people to lose their jobs over that. The second reason is the easier it is to fire people, the more likely you are to hire them. And the problem is that all of these countries have very rigid labor markets, and therefore people and businesses are very, very reluctant to hire people because they fear that if the progress or growth may not be quite what they think it is, then they can't get rid of them again.
One of the criticisms I have heard has to do with pay. People in Europe make quite a bit of money, even at the bottom end and obviously on the top end as well. And some say maybe if there was more flexibility in the pay scales, that would make a difference to the number of people that were actually employed.
Oh yeah, no, I don't think there's any doubt about that. I think there's a number of countries, not just in the southern periphery, but you can take France as well, where you do have excessively, in my opinion, high minimum wages.
I want three countries that are doing it right that should be an example of how Europe should be.
Well, I think the first one I would pick is Sweden. Sweden is a country that has, very solid public finances. It has a very high retirement age and generally quite flexible and competitive businesses. Germany is another country that I would highlight. And then I would actually highlight some of the Eastern European countries. Poland, the Czech Republic, Slovakia, even the Baltic states, arguably. These are countries that have, again, low levels of government debt. They're very open to foreign direct investment. They have, stable political systems and flexible labor markets.
Now give me three countries that are doing it completely wrong.
The country that I actually think is doing the most thing wrong right now is France. France is a country that has a strong foundation. It has good demographics, it has competitive firms, etc. But for the last 10, 15, 20 years, at least since the euro began, France has done not a single major structural reform. But the reality is in France that the effective retirement age in France is less than 60 years of age, which means that the average French person can expect to draw a public pension for between 20 and 25 years. That's just not sustainable if you only work 35 hours a week. There I would take Italy. Italy is a country that, again, it's not Greece, it's not Portugal. It has obviously very high levels of debt, but more importantly, it also continues to have very, very rigid labor markets.
What does next year look like for Europe? Is Northern Europe going to win the reforms they want, or is Southern Europe going to continue to try to drag all of Europe into this malaise for the next 18 months?
No. I think, as I said, I think the bottom has been reached in the southern part of Europe. And I think we are at the cusp of, the slump has stopped, but we are on the cusp of slow but sustained growth. I think the key thing is, for Europe the next 12 months, is that they gotta, once and for all, have a banking sector stress test that is appropriate and credible. Because if you don't have basically market faith in the European banking system, these banks will not be in a position to lend money to non-financial businesses, particularly SMEs in Europe. And if that doesn't happen, you won't have growth and you won't have sustained job creation. That's the key.
Very quickly, yes or no, does Greece need more money?
Yes.
That was Jacob Kierkgaard at the Peterson Institute for International Economics. Coming up next.